Hello, and you're welcome to Global Business Insights, where we go a little deeper, looking at headlines all over the world from a global business perspective. Our main story is UK inflation data, which just came out. The inflation rate in the United Kingdom decreased to 2% in May from 2.3% in April 2024, also hitting the Bank of England's target. Core CPI, that is excluding volatile food and energy items, was up 3.5% year on year in May compared to April's increase of 3.9%, also coming in line with the forecast. The artificial intelligence hype continued to defy concerns on the economy and high interest rates as the US Federal Reserve awaits more data to be confident on next steps. The S&P 500 closed yesterday up 0.25% and the sixth record close in 7 sessions. The Dow was also up 0.15%, while the Nasdaq ticked up as well 0.03% for a 7th straight all-time high. It's also the Nasdaq's longest record streak since 2021 as Nvidia spiked up 3.5% yesterday to bring its market value to $3.335 trillion, beating Microsoft's $3.317 trillion and now the most valuable public company in the United States. To appreciate this unusual jump, just 2 years ago, Nvidia was number 10 and last year was the 5th most valuable company, and the momentum seems to still favor Nvidia given how the AI narrative is still playing. Today, US stock and bond markets are closed for the Juneteenth holiday. The Federal Reserve Bank of Boston President Susan Collins said it's too soon to determine whether inflation is durably on a path back to the 2% target. St. Louis Fed President Alberto Musalem said there are potential early signs of continued progress on inflation, while Richmond Fed President Barkin said we're clearly on the backside of inflation. But the question is, are we all the way back? The mood of caution seems to be prevailing as far as the Fed is concerned. Observers are also concerned that the data may be showing high interest rates now beginning to hurt growth, as retail sales that just came out came in much lower than expected. Another Fed Governor, Joanna Kugler, commented on the retail sales data, said retailers were compelled to slash prices to attract consumers with tighter wallets, and this will also help to bring inflation down at a faster pace. Yesterday, we saw US Treasuries rallying after retail sales came in weaker than expected as consumers wrestled with stubbornly higher levels of inflation. Retail sales fell 0.1%, less than 0.2% expected after stripping out more volatile vehicle sales. Yesterday, we also got US industrial production up 0.9% on a monthly basis in May, coming in better than the market expectation for an increase of 0.3%. Crude oil is attempting a recovery, now over $85 a barrel. It's been a very volatile period in the last week as Brent seems to have recovered all the losses incurred after the last OPEC Plus meeting. It's surreal. Nvidia has posted a total return of about 600,000% since its initial public offering in 1999, when shares were priced at $19.99. And it's a testament to how investors see Nvidia, the single biggest winner of the AI boom. Nvidia has now overtaken Microsoft and Apple to emerge as the most valuable publicly listed company in the world. The Silicon Valley-based company Nvidia, founded just 31 years ago to build PC graphics cards for video games, has in the past year seen successive quarters of huge revenue growth, announcing a 265% year-on-year increase in February, 262% increase in May. Its shares are up roughly 170% since the start of the year. Its meteoric rise is in the design of highly sought-after AI chips, the brain behind processors driving the latest generation of computers. Google, Microsoft, and Amazon have all lined up buying its Hopper series of graphic processing units for their cloud services. NVIDIA's software ecosystem, CUDA, which offers tools for developers using its chips, has also cemented a rare dominance. Even the AI bulls are warning it's a bit too good to be true. Competitors like AMD and Intel have launched their own competing AI chips, but are still far from eroding NVIDIA's commanding edge. Most of its valuation is linked to futuristic aspirations of what AI will do, and in an economic growth scenario that is still fraught with much uncertainty, my conclusion has to be to proceed with utmost caution if you must dive heavily into NVIDIA, as most agree its dominance will eventually be broken, but it's not likely to happen soon. I still favor, say, an Apple with an easier to understand value proposition, but no one can ignore NVIDIA, now being called the Magnificent One, as it stands out amongst the top 5 most valuable US companies, which, by the way, are all technology companies. It seems the upside momentum is firming for crude oil. Oil markets are looking to see the peak driving season in the summer support prices, but gasoline demand so far has been less than expected. US consumption is 2% lower year over year. The pressure on gasoline might, however, increase later, as this year's 2 main refinery new builds, Nigeria's Dangote and Mexico's Olmeca, are both delayed and may not produce in time to support summer demand. Oil prices have gradually recouped all their losses following the OPEC Plus meeting, and Brent is back to over $85 per barrel, though quite volatile. I can see it was up earlier in the morning. It's now slightly down today as we speak. Global macroeconomics may be looking more positive, as comments from the US Fed and others this week persuade the market that demand may be creeping back with better economic growth. Inventories are, however, piling up in the US. The American Petroleum Institute reported US crude inventories up by 2.3 million barrels last week, the third increase in a row. High inventory points to ample supply as the US opens the taps and pulls from strategic reserves to keep prices down. I expect fully that prices will be low till after the US elections. EVI is still predicting sub $80 per barrel on average for Brent in the year. However, on the demand side in Asia, refiners are restoring some capacity following maintenance, boosting crude consumption and demand. Other oil and gas news: Total Energy sold its Brunei upstream business to Malaysian exploration firm Hibiscus Petroleum for $260 million, providing funds for further Namibia drilling. Shell agreed to buy Singaporean LNG firm Pavilion Energy from investment firm Temasek, taking over its 6.5 million tons per annum portfolio of long-term supply contracts and strengthening its position as the world's top gas trader. Now to UK inflation, the main analysis for today. Consumer Prices Index CPI rose by 2% in the 12 months to May 2024, down from 2.3% in the previous month. Month on month, CPI rose by 0.3% in May compared to 0.7% in the previous year. The largest downward contribution to the monthly change came from food, with prices falling this year but rising a year ago, while the largest upward contribution was from motor fuels, with prices rising slightly this year. The sticky core consumer price index, excluding energy, food, alcohol and tobacco for services, eased only slightly from 6% to 5.9%. Now that is something that the BOE will be watching. That's the services, the core services inflation data at 6%, while the core CPI, excluding energy, food, alcohol and tobacco itself, rose by 3.5% in May year on year, down from 3.9% in April. So some progress there. But significantly, it was the first time inflation has been at the Bank of England's target since July 2021. The Bank of England has an important decision to make as Britons moan under high interest rates. One more reason to change leadership as elections take place next month. Tomorrow, the bank's Monetary Policy Committee will announce its latest decision on interest rates. If indeed it cuts rates just 2 weeks before election day, it may risk being accused of favoring the Conservatives. But given the inflation data today and the ECB decision to cut rates despite not having anywhere near as good inflation data, added to a flat economy in April, dampened by the wet weather in the UK, which was, of course, a poor start to the second quarter. If the Bank of England still holds, of course, it will be accused of bias towards the Labour Party. Navigating the political tightrope can be tricky. The easiest scenario would have been if today's inflation had sprung an upside surprise. It did not. The Bank of England would have simply folded its hands and justified a decision to hold. Already, MPC members were warned to make no comments since the decision to hold the election on July 4 was announced, fully aware that any comment could be leveraged by politicians. 2 members of the 9 at the last meeting voted for a cut, so we need only 3 more. The MPC has never changed interest rates at the meeting immediately before a general election, and it's prudent to wait to fully understand implications of a possible leadership transition. Sunak will be taking his victory lap, bringing down inflation from over 11% in October 2022 is no mean feat. Others say the drop in energy prices did the trick and not the Bank of England or anything Sunak did. Still, it must put the Bank of England's MPC and the Conservatives in a much better mood. Whatever the Bank of England does and whoever assumes the helm of leadership, most likely Starmer based on the polls, my view is that there are no magic bullets, and the road to recovery of the UK economy after multi-shocks of COVID, Ukraine and Brexit is a hard one. The Confederation of British Industry, CPI, said the stage was now set for the Bank of England to cautiously cut interest rates. I think it's 50-50 that we get a cut tomorrow. The odds may still slightly favour a hold. The earlier ECB cut, I think, would also have helped. The UK is remarkably ahead of the ECB on inflation. Indeed, the UK is the first major economy to have met its 2% inflation target. In the US, they don't expect to see 2% till perhaps 2025. President Ramaphosa is due to be sworn in today for another term as re-elected president of South Africa. Investors are focused on who will be on his cabinet. Demand at South Africa's weekly government bond sale also was up, signaling improved sentiment as political parties agreed to a governing alliance with parties including the centrist Democratic Alliance after the ANC lost its parliamentary majority in last month's election. In Asia, markets digested the latest Japan-May trade data showing exports beating expectations. Exports were up 13.5% year-on-year compared with the 13% expected by analysts. Imports, less than expected, grew by 9%. 0.5%. The Reuters Tankan Index reading also showed business confidence among large Japanese manufacturers down to +6 from +9 in May, while business confidence among non-manufacturers improved to +31 from +26 in May. Looking at Asian indexes, mixed. Nikkei 225, that's Japan, up 0.23%. The Hang Seng, that's the Hong Kong index, up 2.55%. Shanghai Composite down 0.34%. The Shenzhen Composite down 1.02%. The South Korean Kospi up 1.21%. The markets mostly are closed. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Thank you very much for watching. Bye-bye.